Imagine this. Silver is swinging wildly, jumping one day and crashing the next, while gold is sitting there, calm, steady, almost unbothered. And right now, investors all over the world are asking one simple question. Which one actually makes you more money in 2026? Because this is not a normal market anymore. We're seeing something unusual. Silver recently saw massive volatility, dropping sharply from its earlier highs and then bouncing back aggressively, while gold has been holding its ground much better. That difference alone is creating one of the biggest investment debates right now. Let's break this down in a way that actually makes sense. Right now, gold is trading in a relatively strong and stable range, supported by global uncertainty, central bank buying, and its long-standing reputation as a safe haven asset. Whenever there's fear in the market, whether it's geopolitical tension, economic slowdown, or inflation concerns, gold tends to benefit almost immediately. And in 2026, those fears are everywhere. From ongoing global conflicts to uncertainty around interest rates, gold is quietly doing what it has always done, protecting wealth. But silver is a completely different story. Unlike gold, silver is not just a safe haven asset, it's also heavily tied to industrial demand. That means it reacts not only to fear, but also to economic growth, manufacturing activity, and technology demand like solar panels and electric vehicles. And that's exactly why silver is moving so unpredictably right now. Recently, silver experienced a sharp correction. Prices dropped significantly from earlier highs, shaking out weak investors and creating panic in the market. But then, almost suddenly, silver started bouncing back again. This kind of movement tells us something very important. This is not a weak market. This is a confused market. And confusion creates opportunity. Now here's where things get really interesting. One of the biggest factors controlling both gold and silver right now is the US dollar and the Federal Reserve. When the dollar gets stronger, metals usually go down. When the dollar weakens, metals go up. And in 2026, the dollar has been relatively strong due to uncertainty around interest rate cuts. The Federal Reserve is not cutting rates as aggressively as markets expected. That's putting pressure on metals, especially silver. Why silver more than gold? Because silver is more volatile. It reacts faster both on the upside and the downside. So when investors start pulling back due to higher interest rates, silver drops harder than gold. But when sentiment flips, silver also rises much faster. This is exactly why many traders prefer silver over gold. It offers bigger moves, bigger opportunities, but also bigger risks. Now let's talk about investor behavior, because this is where smart money is focusing. Large institutional investors and central banks are still heavily invested in gold. They trust gold for stability. They're not looking for quick profits. They're looking for long-term protection. And that's why gold continues to hold strong even when markets become unstable. Retail investors, on the other hand, are increasingly looking at silver. Why? Because silver is cheaper, more accessible, and has higher upside potential. If gold moves 5%, silver can move 10% or even 15% in the same period. That kind of movement is attractive, especially for smaller investors trying to grow their capital faster. But here's the catch. That same volatility can work against you. So the real question is not just which is better, it's which is better for you right now. If the market continues to remain uncertain with geopolitical tensions rising and economic signals mixed, gold will likely continue to perform steadily. It may not explode upward quickly, but it will hold value and gradually move higher. Silver, however, will depend on two key things: economic activity and market sentiment. If global growth expectations improve, if industrial demand picks up, and if the dollar weakens, silver could see a powerful rally. In fact, many analysts believe silver has the potential to outperform gold in such a scenario. But if the opposite happens, if the dollar remains strong and economic uncertainty continues, silver could stay volatile or even face more downward pressure before stabilizing. Now let's talk about what could happen next, because this is where things get critical. In the short term, we are likely to see continued volatility in silver. Price swings will remain sharp, with sudden rallies and sudden drops. This is not a smooth trend. It's a battle between bullish and bearish forces. Gold, on the other hand, is expected to remain relatively stable, possibly moving higher slowly as long as uncertainty remains in the global economy. In the medium term, everything depends on the Federal Reserve. If rate cuts begin, or even if expectations of rate cuts increase, both gold and silver could rally strongly, but silver would likely move faster and more aggressively. There's also the geopolitical factor. Any escalation in global tensions could immediately push both metals higher. But again, gold will act as the safe haven leader, while silver will follow with more volatility. And in the long term, silver's industrial demand could become a major driver. With the world moving toward clean energy, electric vehicles, and advanced technology, silver demand is expected to grow significantly. That gives silver a unique advantage that gold simply does not have. So when you combine all of this, the answer becomes clearer. but not simpler. Gold is the safer investment right now. It offers stability, protection, and consistent performance in uncertain times. If your goal is to protect your wealth and avoid major risks, gold is the stronger choice in the current environment. Silver, however, is the opportunity investment. It is more volatile, more unpredictable, but also has greater upside potential. If the conditions align, weak dollar, improving economy, rising demand, silver could deliver much higher returns than gold. But you have to be ready for the swings. This is not a market where you can blindly invest and expect smooth results. This is a market where understanding the bigger picture makes all the difference. Right now, we are in a transition phase. The market is trying to decide its next direction. And until that decision becomes clear, volatility will remain high, especially in silver. So, the smartest approach is not to choose blindly between gold and silver, but to understand how each one behaves and position yourself accordingly. Because at the end of the day, it's not just about which metal is better, it's about which strategy is smarter. And in this market, smart decisions are what separate winners from everyone else. So the next time you look at gold and silver charts, don't just see prices, see the story behind those movements, because that story is what tells you where the market is going next.